我開始咗啦。Hello everyone, it's me again. Today we have our 23rd set of paper for July year 2017 LCCI Level 3 Financial Accounting. Okay, again, 100 marks, 5 compulsory questions. Oops. Let's start. Okay, so first we have this 1, 2, 3, 4, 5, 6 items. Okay, some questions. Okay, we have to state one limitation of preparing trial balance. So for trial balance, it helps us locate errors. Okay, and also for the preparation of assist the preparation of financial statements. Okay, but then sometimes it cannot help you find some of the errors. Okay, so even if the trial balance is balanced, errors may still exist. Okay, so and then we have to calculate the change. Okay, this time the change in the revenue of in the value of closing inventory, and then insurance paid in advance. Okay, the adjustment. Okay, and then also to calculate the rent received in advance, the adjustment needed, and then the extended trial balance, 19 marks. Okay, so let's read the question. Closing inventory included damaged goods costing 7,500, which could be sold for 8,000 after repairs of 900. That means the NRV is equal to 7,100. There's an impairment of 400. Okay, and when we continue to read through, there are no other items related to inventory. Okay, so the adjustment needed 400. Okay, value of closing inventory, the change in the value. Okay, there should be a 400 decrease in inventory. Okay, so let us update inventory given to you already. Okay, so statement of financial position debit, statement of profit and loss credit. Okay, so if we want to reduce it, we go to the opposite side, 400, 400 here. Okay, item 1 finished. Item 2, insurance included motor vehicle insurance of 900 for the 3-month period ending 30th June year 2017. Our year end is 30th May, so there will be 1 month of prepayment. Okay, so 3 months costing you 900, that means 300 per month. We have 1 month payment in advance. Okay, so that answer your question in B2. The insurance paid in advance would be 300. Okay, and the adjustment is negative. Okay, in the insurance account, So let us go to insurance. Insurance is in the debit side, so if we want to reduce it, 300 here, and then other receivables, 300. Item 2 finished. Item 3, rent of 1,500 received for the year ending 31st December. So this is for the year. Okay, so 1,500 for 1 year divided by 12, we have 125 per month, and then we have to count how many months prepaid, received in advance. Okay, so our year end 31st May, that means we have June and then July to December. Okay, that is 7 months in total received in advance. Multiplied by 125, we have 875. Again, that answered the question in B3, that is 875. Okay, received in advance, again negative. Let us go to rent received here. Okay, it is in the credit side, so negative means debiting other payables. You owe others the services, okay, the provision of the venue for other businesses. Okay, so item 3 done. Cash drawings 545 recorded in the general expenses account. Okay, goods taken by Rosie is the owner of the business, were recorded correctly into drawings account. No other entries have been made. Okay, so there are 2 items here. 545 cash drawings recorded in general expenses. So instead of putting it into drawings, you put it in the expenses account. Okay, and then for the goods taken, okay, 865, okay, you put it correctly in your drawings account. No other entries. We have to reduce the amount of purchases. Okay, so let us go to the extended trial balance. So first of all, from general expenses, okay, we reduce the amount by crediting 545 and put in the drawings account 545 here. Okay, next item 865, you go to purchases. It is in the debit side, so if you want to reduce, again credit the purchases account 865. Okay, and then because it is an item of single entry, okay, omission in part, okay, that will go into the suspense account. Okay, next. Item 4 done. Item 5. A check received from trade receivable 735 was recorded in a cash book as 753. Okay, so the difference 735 and 753, it is 18. Okay, so 18 recorded in the cash book a receipt. So let's go to the cash book. Okay, the receipt is overstated. Okay, a receipt is in the debit side, so we want to correct it. It will go into the credit side, 18 for bank, and also trade receivables, 18 here. Okay, because the receipt is overstated, okay, it goes into the bank account as the entry in the original books. Okay, that's why both accounts will be incorrect. Okay, so last item, we have the purchases column of the purchases daybook was understated by 100. Okay, so this one I have to say I do not agree with what we have, okay, in the answer key, okay, but then we have to look at the suspense account as well, because when all the errors are corrected, we should have a correct amount for suspense. Okay, we should cancel all the balances there. But let's see. Okay, so purchases column of the purchases daybook understated. Of course, we have to increase the purchases account. Okay, this is for sure. Okay, so purchases increase, we have 100 here. Okay, when the total is understated, okay, we also expect trade payables to be understated. Okay, because in level 3 financial accounting, we assume that we will use the control account as the as part of the double entry. So if the total of the purchases daybook is incorrect, then purchases is incorrect, trade payables is incorrect. Okay, but then you see here we do not have any trade payables account. Okay, this is the first hint we have. Okay, if we cannot put in the trade payables account, of course, we have to think of other ways. Okay, and you look at suspense account. The balance is 765, and we have already adjusted 865 for it. Okay, so we still have 100 remaining. Okay, if we put 100 here, it will make this account correct, the suspense account. Okay, so the only sensible answer in this case would be putting 100 in the suspense account. And if that is the case, that means for this question, the assumption is that the control account is not part of the double entry. Okay, the individual trade receivables and payables account is part of the double entry. Okay, so still it is good that they give us the hint. Okay, if trade payables is there, okay, if we are not given the amount of suspense, I would have put it into the trade payables account. Okay, okay, so let's go to part D. State one reason why a business would have different staff maintaining its trade payables ledger and trade payables ledger and trade payables control account. Okay, so different staff maintaining it. Okay, for control account, there are three main functions of it. Okay, first of all, okay, it check the accuracy. Okay, as a control. Second thing, okay, when we want to check accuracy, when we have one control account and then another individual ledgers for trade payables, it is for the prevention of fraud. Okay, and then it can provide a summary for management information, and here it asks why we use different staff. Okay, that is of course about control, about controlling fraud, prevent fraud. Okay, so to prevent fraud. Okay, so question 1 done. Let us move on to question 2. Question 2, sole trader provided the following. Okay, not much information given, and what we have to do is, okay, prepare the non-current asset register. So the first thing, no, you are given the non-current asset register. Okay, and then prepare the allowance for doubtful debt account, disposal account, okay, and then it's done. Okay, so I would say it is sundry topics. Okay, not focusing on any of the item. Okay, so first of all, state 2 other advantages of being a sole trader. Okay, being independent is one of the advantage of being a sole trader compared to being a partnership. Okay, then you can also be flexible. Okay, about decision, about time, okay, about other things. Okay, type of goods and services. Okay, you can keep all the profit. Okay, you can also say the formality is the requirement for formality is less. Okay, because you are the one who is responsible for the whole business. Okay, so B1, calculate the allowance for doubtful debt and then prepare the allowance for doubtful debt account. Okay, so this is the closing balance. Okay, I guess you are given the opening balance. Okay, so let me draw the account first and then go to look at the information given. Tony, a sole trader, provided the following information. On 1st of January, you are given directly the allowance for doubtful debt balance 4850, and then at the end of the year, trade receivables given to you, and then irrecoverable debt 3000 to be written off. That is not yet written off. We have to reduce the amount from the trade receivables given, and then 5% allowance was to be maintained. Okay, so 4850. We have 4850 here. Okay, calculate the closing balance 75,000 minus 3,000 and then 5%. Okay, that is easy for you. So we have, we have 3600. That is a decrease, okay, of 4850, 3,600. Okay, 1250. Okay, so our opening balance is in the year 2016, 1st of January, the opening balance. Okay, and then the same year, year end, closing balance being 3600. Okay, and then this goes to the statement of profit or loss. Year 2017, 1st of January, balance brought down. Okay, 4 easy marks. Okay, so next one, explain which accounting concept is applied when creating an allowance for doubtful debt. Of course, it will be prudence. Okay, it is also possible to talk about accruals concept. Okay, so if there is a possible loss, okay, the possibility of having a loss, okay, then you should record it. Okay, so next we have the disposal account. Okay, let us read on. Prepare the disposal account for machine 002 and also calculate the total depreciation for the year. Okay, let us go back to the information given. Okay, this part finished. Depreciation is charged 20% reducing balance method, and depreciation policy to charge a full year's depreciation in the year of purchase, none in the year of disposal. We are in the year 2016. Okay, 20% reducing balance. Let me write down first. Reducing balance. Okay, so let's go to machine 002 first. We have machine 002 purchased on the 1st of November and depreciated for 3 years, okay, totaling depreciation to be 4880. Okay, you can also find it by deducting the deducting the carrying value from the cost. Okay, also you get the same amount. Okay, so 4880 and your cost being 10,000, it is disposed of for 3,000, and then it is disposed of on the 1st of November. Okay, 1st of November, 4880, 3,000. Okay, so we can prepare the disposal account. Okay, year 2016, 1st of November. Okay, the cost is here. Okay, it is what, machinery, right? Okay. And then here, accumulated depreciation of machinery. Okay, we have 4880. Okay, and then 3,000 bank. Or is it a trade-in? That is clearly. Disposal proceeds. Okay, trade-in, allowance, and bank. Okay, so here, okay, 3,000 is the trade-in allowance. So instead of writing bank here, we do not receive anything, so it goes to the machinery account again. Okay, so disposal loss, 4880, 3,000. Okay, we have 2120 disposal loss, and then that goes into our statement of profit or loss. 31st December. Okay, so it's done. Calculate the total depreciation charge for the year, 20% reducing balance method. Okay, so let me use red for the calculation. So we want to know in year 2016 how much. Okay, so here we have carrying value 20%. Okay, the cost 20%. Okay, so 20480 multiplied by 20, we have 4096 here. Okay, and 15,000, 20% will be 3,000 here. Okay, so added together, you have 7096. 7096. Okay, that would be from 4096 plus 3,000. Okay, so total depreciation. Next one. Explain which accounting concept is applied when depreciation is charged on non-current asset. Okay, that would be accrual. The accruals concept. Okay, sometimes it is also possible to mention the prudence concept. Okay, but I would, if we are asked to give one, okay, I would always prefer to give accruals concept. Okay, because we consume, okay, or we utilize part of the economic benefits of the machine. in the current year. Okay, that's why it should be charged depreciation, okay, for the usage of, for the consumption of this machine, of this non-current asset. Okay, so question 2 done. Let us move on to question 3. Question 3, partnership. Okay, so we have PQR in partnership. Capital and current account balances, this should be the opening balances. Okay, for Q, we have a debit balance here, so negative. The partnership agreement provided for profit and losses to be shared in the ratio of 4 to 3 to 3, interest on capital at 12%, and salaries. This is for 1 year. On the, wow, how many months? 1st of February, year 2017. Okay, let us count. Okay, if our year end is on the 30th of April, that means we still have February, March, and April. Okay, that is 9 months after year start. The partnership agreement changed to have profit and losses shared equally among all partners, interest on capital 15%, and interest on drawings 10% on the balances at year end. Okay. Salaries. Okay, salaries to be changed as well, and then Q&R introduced additional capital of 20,000 each. Okay. Okay. Drawings. Drawings for the year given to you. Okay, drawings 21,000, 12,000, 27,000. Okay, drawings. And then the profit for the year accrued evenly before appropriation was 108,000. Okay, and then we have admission of partners after year end. Okay, so let us see what is. Okay, let us read on. Soma is admitted to the partnership after year end. Okay, at year end, or I should say, she introduced 80,000 in the business. This was paid by check. Goodwill was valued at 60,000, and the partners decided not to maintain goodwill in the books. All partners agreed to share profits and losses equally. Okay, so state 2 reasons why a partner may have a debit balance on their current account. Okay, this we have attempted before. Okay, it is possible that we have a loss in the partnership. Okay, or the partner has overdrawn its current account. Okay, more drawings than the appropriations. Okay, so part B1, the appropriation account for the 9-month period. Okay, 4 marks only, and also the appropriation account for the 3 months period. Okay, so it is separated into 2 parts, but then actually it is before we have done just one. Okay, one appropriation account with 2 columns. Okay, it will be the same. So let us draw the columns, okay, for both. Okay. So we have net profit, and then appropriations. Okay, we have salaries for P, Q, and R. Okay, we have interest on capital for P, Q, and R. Okay, why are we just given so few lines? Okay, profit available for distribution. And then we have share of profit. Hopefully it is profit for P, Q, and R. Okay, so let's see. Salary, net profit, 108,000. Okay, for 9 months. 108. We have 81,000. And then salaries. Okay, remember we have to apportion it, okay, to 9 months, because what we are given here is a year's salary. 18,000 for 9 months would be 13500. 24 for 9 months, 18,000. 15 for 9 months, 11250. Okay, so 13500. 13500. 18000 and then 11250. Okay, the bracket should be here. Okay, that would be 42750. Okay, and then interest on capital. For interest on capital, 12% per annum. Remember to multiply by 9 months again. Okay, so 80,000, 12%, 9 months. That will be 7,200, and then 60,000, 12%, 9 months, 5400. Okay, for both partners. 72005400, and then the profit sharing ratio is 4:3:3. Okay, so we have 7200, 5400, the same. $18,000 in total. Okay, that would give you 20250. Okay, profit available for distribution. Okay, and then in the ratio of 4:3:3. $8100 $6075. Okay, let me check if these three added together will be equal. Yes. Okay, so next one we will have the remaining 3 months. Again, net profit for the 3 months, 108, and minus 81, we have 27,000. Okay, appropriations, again, so few lines. Okay, we don't have enough space. Salary. Okay, we'll have to squeeze a little bit for P, Q, and R. Okay, interest on capital, P, Q, and R. Interest on drawings, P, Q, R. Profit available for distribution. Okay, we have share of profit for P, Q, and R. Okay, negative for both, and then positive. Okay, and then here. Okay. So let us go back. Salary. Okay, the salary now is 24,000, 30, and 36,000, but then for 3 months. So 24. Okay, that would be 6,000, 7,500, and 9,000. So we have 6,000, 7,500, and 9,000. 6,000, 9,000. That would give you 22,500. Let me check. Yes. Okay, interest on capital. Okay, there is a change in the capital. Let us take a look. Here, Q and R will introduce additional capital. So originally it is 8,000 and then 60,000 for Q and R. Now it will be the same, 8,000 in total for all 3 partners. Okay, now the interest on capital is 15%, and then for 3 months, so 80,000, 15%, and then 3 months, that would be 3,000 for each of them. Okay, so 3,000 total, you have 9,000. Okay, next, interest on drawings. Okay, interest on drawings here. Okay, drawings, total drawings. Okay, but then we only charge 10%. Okay, after the change in the of the partnership agreement, so 10%, and then for 3 months. Okay, 21,000 for 3 months. That would be 525. 300, and then 675. 55, 300, and 675. Okay. 500. No. 525, 300, and 675. 300, 675. That would be 1,500 added. Okay, so 27,000 minus salaries minus interest on capital plus 1,500. Oh, that would be 3,000 negative. Okay, So this is not profit available for distribution. Okay, there's no profit, there is a loss. So here we have loss to be distributed. Okay, now it is shared equally among the partners. Okay, so it will be 3,000 total. Okay, how much? Next one, how much will Summa? Okay. Summa is the new guy, right? How much will Summa paid for goodwill? Okay, so here let us go back. The goodwill was 60,000. So when it is created, the original three partners will have an increase in capital of 20,000 each, shared equally. Okay, and then the goodwill written off, okay, will be divided by 4. So 60,000 divided by 4, it would be 15,000, right? 15,000 each. Okay, so of course for Summa, it would be 15,000. Prepare the capital account of Summa on the 30th of April and balance the account on the date, bring down to 1st of May for the next month, next year. So here, year 2017 for the 30th of April, that it will be the change. Okay, contributed 80,000 through a payment by check. Okay, and then goodwill written off 15,000 here. Goodwill still at the end of the year 17, year 2017, 30th of April, and then the balance 65,000. Okay, and then year 2017, 1st of May, 65,000. Okay, 4 marks. Okay, easy marks compared to, you know, the appropriation account. So many things to be calculated. Okay, and then you just have 4 marks, 5 marks. Okay, so next one, discuss whether the partners is considering converting the business into a limited liability company. Discuss whether they should convert or not. Okay, so this question we have attempted for so many times already. Okay, so we are not going to do it today. Okay, so please, if you do not know the answer, check the previous papers. There is one thing indeed I would like to talk about. Okay, for the appropriation accounts. Okay, so I don't know if you have attempted the previous questions. Okay, there is 1 or 2 questions that I have doubt. Okay, about a change in partnership when there is a change during the year. Okay, how to, you know, apportion. I mean, in the appropriation account. Okay, how to deal with the change. Okay, how to deal with change in the capital. Okay, or apply interest on drawings. In one previous question, okay, when there is a change, okay, the question, the answer, ignore the change, okay, and use only the opening balance to calculate everything. Okay, before the change, after the change, appropriation account. Okay, I have doubt at that time. Okay, and you see in this question, okay, it is set nicely. The model answer, the mark scheme is done nicely. Okay, because I think everything is what it should be. Okay, when there is a change in the partnership, before the change, after the change, these are two completely different partnership arrangements. Okay, and you have to consider it as a new partnership when there is a change. Okay, so you see, before the change for the 9 months, it used the opening balances. Okay, and then after the change, the two partners contributed more capital, and then when you calculate the interest on capital, okay, you use the new capital, okay, and you apply the 3 months proportion, okay, and more importantly, okay, it is about the interest on drawings, okay. Again, interest on drawings is only available in the new partnership, okay. So it is correct, okay, to apportion 3 months, 3/12, okay. But then in one previous question, okay, it doesn't apportion, it just used 12 months, okay, because I guess the question say, for example, 10% interest on drawings for the total drawings of the year, okay. Anyway, okay, this question is nice. Okay, so we still have 2 questions. Question 4 is, you see, sole trader and then some other things. Prepare trade receivables control account and then the statement of profit or loss. And then 2 stakeholders. So I would consider it to be a single entry question. Okay, and then question 5. Question 5, of course, it would be statement of cash flows. Yes. Okay, so let's take a break. Let's continue. Okay, so question 4, single entry. Okay, or sole trader. Okay, both will do. So David, a sole trader, provided the following information. Okay, for the year ended 31st March, we have opening balance and closing balance in the left-hand side. Bank loan, okay, from nothing to a bank loan of 15,000, equity, and then inventory, prepayment for general expenses, trade payables, receivables, and then the non-current assets. All purchases and sales are on credit. Goods are sold at a profit of 25%. On 1st of October, a bank loan was taken out. Interest payable 10% per annum for 4 years. No interest had yet been paid. Okay, so 1st of October, that would be halfway through the year. Yes, October, November, December, and then January, February, March. Yes, half year. So 15,000 for 10% interest, and then half year, that would be 750 interest. Receipts from credit customers, 75500. General expenses paid. And then David took money for personal use but not recorded in any of this. Has not got any record of this. Okay, the same thing. Depreciation on property, 10% straight line basis. 10% straight line basis. It is charged a full year in the year of acquisition, none in the year of disposal. So 70,000 for 10%, that would be 7,000 for depreciation. Okay. So what do we need to do? We have to prepare the trade receivables control account first. Okay, so year 2016 for the opening balance. 1st of April, the balance to be $10,000, and then closing. Opening 14,000. And then closing 10,000. $75500. Okay, for the receipt. Okay, there is no discount. There is no irrecoverable debt. Okay, so good. 14,000 opening. Okay, so we have year 2017, 31st of March, we have the transfer to the statement of profit or loss. Okay, for the sales of the year. Okay, and then we have bank, the receipt 75500, and then the closing balance 10,000 for the balance carried down 31st of March. Okay, so we have here, let me put the opening balance for next year first. Balance brought down. Okay, so plus 10,000 minus 14,000, that would be 71500. Okay, and then the statement of profit or loss. So here, 2 columns. revenue calculated already, 71500 less cost of sales. Okay, opening inventory, add purchases, oops, is the drawings on cash. It took money for personal use. Okay, no problem. Okay, let me mark down the inventory. Opening 10800, closing 7500. Okay, so here less margin is good. Okay, margin is on sales, so 25%. 71500, 25%, it will be 17875. So we have cost of sales being 53625. And we have purchases 50325. Okay, after this we have expenses. Okay, we have calculated depreciation 7,000. Okay, and interest expense 750. What else? We have general expenses, right? General expenses. Being 4,000 paid, okay, but then we have prepayment, opening and closing. Add opening minus closing, so plus 500 minus 1250, 4,000 plus 500 minus 1250, 3250, 3250. Okay, I think that's all. 3250. Oops. Okay, this is general expenses. Okay, and then we have profit for the year. Plus 750 plus 7,000, 11000. Okay, then we have a profit of 6875. Okay, so after the statement of profit and loss, we still have the statement of financial position, equity and liabilities part. Okay, so equity, we have opening balance, we have the profit for the year. Let me erase everything first. Clear ink. Okay, so opening equity, we have net profit for the year already. We have drawings. Okay, we have drawings, but then we don't know how much. Okay, that means we have to use the closing equity to calculate drawings. Okay, but then we don't have assets. Okay, for assets, okay, that means we have to calculate assets. Okay, bank, inventory, prepayment, trade receivables. Okay, we have 12,000 for accumulated depreciation. Okay, that means here we have 58000. Okay, I will say. Okay, here we have 58000. Okay, I think that's all for assets. Okay, let me calculate. 500, 7500, 1250, 10,000, and then 558,000. Okay, that would give you total assets of 77250. Okay, that would also be equal to the total equity and liabilities, last item of your statement. Okay, and then after that, okay, you have equity, you have and then you have liabilities. Liabilities, you have non-current liabilities because it is taken out for 4 years. Okay, you have 750 as the accrual. You have trade payables. Okay, so I would say we need 3 columns. 3 columns. Oops. Oops. Yes. Okay, so equity, we have opening equity at the profit for the year less drawings. Okay, drawings is what you need to find, and then closing equity. Okay, after that you have liabilities, trade payables, and other payables. Okay, with that you have total trade and other payables. Okay, it like to show trade and other payables, so I will give the separate 2 items and then show the subtotal as well. Okay, then we have total equity and liabilities. Okay, being 77250 as calculated just now. And equity here. Okay, so let's put the items there. 15,000 for bank loan, other payables 750. Okay, so let us check what other items we have. Opening equity, we have 57300. Trade payables 2,500. 25,000. And then profit for the year 6875. Okay, 6875. 6875. Opening, oops. 6875. Opening equity 57300. Okay, and then trade payables 25,000. That will give you 25,750 for total trade and other payables. 15,000, 25750, 40750. Okay, and these 2, okay, will give you closing equity of 36,500, and this would give you drawings of 27675. 27675, yes. Okay, so that would be 5 marks only. That's a lot of work. Okay, so next part, state 2 stakeholders who may be interested. Okay, again, bank and the government. Okay, also employees, suppliers, customers. Okay, so question 4, 21 marks done. Let us move on to the last part. Okay, that is the statement of cash flows. Okay. So let's see. Mean limited. It's very mean. Okay, provided the following information. Okay, again, closing balance is in the left hand side. Bank to bank overdraft. Okay, so 140 and 75,000. Okay, later when I work with the statement, I will skip all the zeros. Okay, so this is 215, 34 bank overdraft, and 10, that will be 24 negative. Okay, 215, 24, that would be a decrease of 239. Okay, bank loan 1100 to 750, a decrease of 350. Okay, financing negative. Property, plant and equipment we'll see later. Revaluation reserve and increase of 150 will go into the property, plant and equipment. Okay, share capital from 1750 to 2000, share premium also an increase. Okay, so let's see what else is given to us. During the year, a machine costing 450 with an accumulated depreciation 285 was sold for 182500. Okay, so we will have our usual working again, 450 285 450 285. Okay, 165. Okay, that would give you 17500. Okay, this is disposal gain. Disposal gain will go into the operating activities, negative. Depreciation charge 350. Okay, so depreciation charge, and then we have disposal. Okay, so this 2070, we have revaluation 150, and then disposal 165. Okay, here. Okay, and also depreciation of 350. Okay, let's see how much addition we have to make 2100 closing balance. Okay, 395. Let me calculate one more time. 2070, 150 for revaluation, 165 for disposal, 350 for depreciation, and then yes, 395. Okay, so investing activities negative. Dividend 42,000 was paid during the year. Okay, we are not given the retained earnings, so nothing to see here. Just put in the financing activities. Okay, net cash from operating activities given to you directly 85.5. Okay, so that means share capital and share premium we can calculate directly the increase. Okay, so this is 250 increase, this is 30,000 increase. Okay, that means 280 for the issue of shares, financing activities positive. Okay, so let's see what we have to do. Calculate the cost of property that is purchased. Okay, so we have calculated already 395,000. Okay, the working is in the page, in this page. Okay, so this one. Okay, I will not copy again, as we know it is here. 5 points, so you better put properly the workings in the answer sheets. Okay, so next one, prepare a statement of cash flows. So here, 2 columns. We have net cash from operating activities. Okay, and then next part we have cash flows from investing Okay, let's finish this part first. So 395, and then proceeds from the sales. I don't remember. Let us look back. Net cash from operating activities 85.5. Okay, and then 182.5. Okay, this is the proceeds. Okay, so let's put there 85.5. Okay, in thousand. Okay, and then this is 182.5. 182.5 minus 395. We have 212.5 negative. Net cash used in investing activities. Okay, is it a bank loan or a debenture? Okay, this is a bank loan, 350 repayment, and then 280 for issue of shares, and then 42 for dividend. Okay, so cash flows from financing activities. Less repayment of bank loan and issue of shares, less dividend paid. Okay, so repayment 350, issue of shares 280, and then 42 dividend. So there is a decrease. 350, 250, 42, 112,000. Okay, that will be a net cash used in financing activities. Okay, so 85.5 minus 212.5 minus 112, that would be 239. Okay, net decrease in cash and cash equivalent. Okay, so cash and cash equivalent on the year start. Okay, that is 1st of May, year 2016, and then 30th April, year 2016. Okay, the opening balance being 215, closing balance being 24 negative. Okay, 239 decrease is correct. So 215 and then 24. Okay, so finish this statement of cash flows. Seven marks. Okay, next. Min Limited has identified that its trade receivables collection period has increased, whereas trade payables payment period has decreased. Okay, explain how the trade receivables collection period can be used to measure the efficiency of the business. Okay, this is seldom asked like this. Okay, but it is not difficult to answer. Okay, just that you need to understand what you are being asked. Okay, so trade receivable collection period increased. That means there is less efficiency, right? Okay, and to be specific, okay, efficiency in credit control. Okay, you cannot efficiently manage your trade receivables, okay, by maybe credit check, okay, by maybe frequent follow-up with your credit customers, okay, sending them statements, okay, calling them to urge them to pay. Okay, these are all credit control. Okay, and if you fail to do that, okay, it will affect your liquidity. Liquidity will worsen. Okay, so next, your trade payables payment period has decreased. Okay, explain how this can be used to measure efficiency of the business. Okay, and you know, if your trade payables payment period is reduced, okay, it also may affect your liquidity. Okay, because you have to pay your trade payables earlier than before. Okay, and you can collect money from your credit customers longer than before. Okay, that means you have to have more money to do that. Okay, that would also be a reflection of the inefficiency in bargaining with trade payables. Okay, with your suppliers. Okay, maybe they are not willing to supply you with more goods, okay, or have a longer period of credit period because they can see your liquidity is, you know, your liquidity has worsened, okay, from your statement of cash flows. That's why they are trying to tighten their credit control on you. Okay, so 2 marks for each point. Okay, for trade receivables collection period and trade payables settlement period. Okay, so last of all, 5 marks again for the profitability and liquidity of the business. Let us see what is given to us in the information. Okay, so 2 years given to us, again, Min Limited. Okay, the gross profit margin decreased, profit for the year decreased, return on capital decreased as well. You have current ratio increase. Okay, your quick ratio also increase a little bit. Okay, but then, okay, that would be very strange because you have a very, very large bank overdraft, cash and cash equivalent, not really large, okay, 24. But then there is a large decrease of cash and cash equivalent from 215 to negative 24. Okay, so that is quite strange for here. Okay, the figures don't add up for me. Okay, but then that still can be. Okay, let me think. Okay, so profitability first, of course, everything decrease. Okay, profitability worsen. Okay, but then you still can look at the three ratios separately. Okay, you are not able to sell your goods at a good price. Okay, a very great fall from 24 to 17.2%. Okay, and because of this, it eats into your net profit. Okay, you can see the net profit margin is lowered as well. But then when you look at the extent of decrease, okay, that is around a 7% decrease in the gross profit margin, but only around a 3.3 decrease in the profit. That means it is possible that you are selling your goods at a lower price to attract a higher volume. Okay, and you try to control your costs. Okay, but then still you are making less profit from it. Okay, and you see your return on capital decrease because of the lower profit. Okay, there's one thing worth taking note. Okay, that is you have a decrease in bank loan of 350 and an increase of share capital and share premium by 280. That means the total capital employed should still be falling. Okay, your capital employed is falling. Okay, but then your return on capital, because of the lower profit, is still falling. Okay, so very bad situation for profitability. How about liquidity? Okay, from the figures you can see there's an increase in both ratios. Okay, but then 5.2 is quite high for current ratio. Okay, it's possible for too much inventory held. Okay, too much cash tied up there in inventory. Okay, and also for quick ratio, you have a bank overdraft. Okay, a negative cash and cash equivalent, and still your quick ratio is 2.76. Okay, that would be because of your increase in trade receivables collection period. Okay, too much money is tied up in the trade receivables. You better ask them to repay the money quickly so that you can fill in the hole from the cash and cash equivalent negative balance. Okay, and use the cash for purchases. Okay, anyway, the situation is bad. Okay, your conclusion should be that the situation worsened in profitability and liquidity, even though the ratios are good. Okay, so that's all for today. I think that is, yes, last 5 points, okay, for the evaluation part. So tomorrow there will be no live streaming. Okay, let's see if we can work on another paper on Thursday or Friday. Okay, so see you.